Good afternoon. Welcome back to the Pulse for episode 2. Episode 2 with here Russ Ogburn of Guild Mortgage. Again, the Pulse is here to give you a heartbeat on what's happening in the real estate world. And today our guest, Mr. Russ here, has been doing mortgages now for, 70, 80 years now?
30-something years.
30-something years. So long enough to know what you're doing.
A little bit.
Okay. Well, I want to give a quick shout out to New Way Realty. They have been kind enough to let us use their office space to do this podcast and to host our second episode. So thank you, Jake, and our New Way friends. Let's jump right in. I mean, I feel like there is a lot of ground to cover. I don't know if we're covered all in 30 minutes, but I mean...
You said 3 minutes.
I did say give us a 3-minute introduction. On
30 minutes? Okay.
Yeah, you got to fill 30 minutes, dude.
Well,
but tell us.
My name is.
Tell us about yourself first. I want to know who Russ Ogburn is and how you came to be in this industry.
Russ Ogburn and how I came to be in this industry. Okay, again, I'm Russ Ogburn with Guild Mortgage, the area manager and producing manager in this market. And I came into mortgages long ago. Way back into the Wells Fargo years. I worked 18 years with Wells Fargo, worked 7 years with NOLA, worked another 7 years with Fairway, and now I'm at Guild Mortgage for 2 years approximately.
Is there something religious there with the sevens?
Kind of. At the end of this 7, I'm retiring, so that's the current plan.
Okay. You heard it here first.
That means I got 5 more years to go, at least.
All right. That's good to know.
All right.
Because people can depend on you for 5 more years.
I would think so.
All right. So you're here now with Guild Mortgage. All right. We're going to year 2. But how did this all begin? What drew you to mortgages? It doesn't seem like, as a kid, you wake up and you go, I'm going to do mortgages.
Well, I actually got hit by a recruiter to see if I wanted to change jobs. And I was working a job, a sales-related position that was during the weekends, and some nights. And the recruiter said, "What do you wish?" I said, "I think I'm looking for more 9 to 5." And so actually he got me into a lending position with that move with the recruiter. So that got me into the door of Norwest and Wells Fargo at that time. At that time, I learned the lending business from start to finish, from smaller loans to real estate loans. And the last half, or more than half of my career has been primarily on purchase business and real estate business as well. So it's been a great, fun journey. It's a great, fun business. So once I got into it, it was fun. It was rewarding. Again, we're dealing with clients with the biggest purchase of their entire life in most cases. And that's really exciting, and it's fun, rewarding, and finding ways to get them in there, and not only just to get them into the house, but do it better than anyone else. We try to always, wherever I'm at, to go above and beyond in all aspects of the lending position to make sure they have a smooth process, that I work with the best people, we have a fun time, it's very clear communication, very smooth. They're getting some of the best programs in the market. And again, we moved to Guild Mortgage 2 years ago. Economy was struggling a little bit at that time. The market was down a little bit. And Guild had about 100 more programs or more than any other lenders in our market. So that was a big draw to make the move to Guild about 2 years ago. A lot of lenders move about every year or two. I've only moved 3 or 4 times in over 30 years, so I don't move very much. So if I move, there's a definite reason to move. But Guild Mortgage offered a lot of things. They service their own accounts for the most part. The bulk of the clients are serviced directly through Guild. That opens a lot of avenues and doors for a lot of additional programs and in-house programs that we do offer. And those are some special programs that we didn't have at our previous lender that I was with, that we do have here. And over the last 2 years, those programs have been very, very important to the current market and helping people getting financed. Our zero down FHA has been one of the most popular. A lot of lenders do not have that program, but we can get people into a house in these current tough times while rates are a little bit higher and money is short, and we can get them into a property with zero down, up to 5% assistance. Don't even have to be a first-time homeowner. Credit score can be as low as 600. We do all the Mississippi Home Court programs as well. Those normally start at the 640 credit score or higher, so we got a big window between 600 and 639 that other lenders do not even go into that realm, and we do. And we can help clients get into a house with still no money down with up to 5% assistance on those programs. Debt ratio up to 56.99, which is very high, so allows for student loan debt and other stuff. Quit smiling at me like that.
Look,
I got on a roll.
I'm thinking in the back of my head, I'm just like, if I'm a first-time home buyer and I've never bought a house before, I just right over my head. I have no idea what's happening right now. So let me take a step back, because again, 30 years experience, you got a ton of knowledge, but let's take a mile-high approach. First-time home buyer, I've never bought a house before. You may or may not know, but our very first episode we did was with a realtor. So we got kind of the house shopping part done. We got our house ready to go, and now we're coming to talk to you. So what does that process look like, kind of from start to finish, from the giant bird's eye view?
Gotcha. So the important thing is you get pre-qualified before you look into houses and get with a quality lender in your market area. In Central Mississippi, I believe we are the go-to lender by far. I'm not even sure there's a second place out there.
I have to agree.
Okay.
Totally unbiased, but I agree.
But basically, we're going to give borrowers information, credit, capacity, collateral. Those are the main items. But we're going to obtain a lot of that information through your application, which we can do over the phone or online. We've got a mobile app now as well that's really handy too.
Does that take like a couple hours to fill out, or?
No, it should take maybe 10 minutes to complete that. You're putting in your base information, your name, social, date of birth, job information, bank information, if you own any other real estate properties. All that information is compiled, and then we research it for you at no cost or no obligation to determine what programs you may or may not qualify for. And one of the big items is going to be your credit. So credit is very important. In general, credit score needs to be over 600 in general. We do have some programs that qualify as low as 580. But most of the government approvals come in around 620 to 640 or higher is what we see when we run the government findings. So getting your credit score to about 640 is a great target. That really opens the doors for most of the loan programs that are out there with us, and probably more with other lenders as well. But at 640, you get the door open to Mississippi Home Corp. If you're at 620 or 630, your doors are closed with most other lenders, but we do have our zero down FHA product that is available and can help first-time homeowners. And again, you don't even have to be a first-time homeowner for that luxury product that we have that most lenders do not. So we're real excited about that product, and that means you could buy a $200,000, $300,000 house if the seller, with your realtor, negotiates with the seller for the closing costs to be paid for or what's left. Because again, FHA would be about 3.5% down, so 5% would cover your down payment plus some of the closing costs. Then we'll ask the realtor to negotiate in the contract the difference of those closing costs that are due, and then our client may go to closing with almost no or very minimal money due at close.
Now, just to jump in, having worked with you for a while now, I have seen this firsthand. I have looked at the CD and seen on a $300,000+ property, $0 due at closing. So it is very real. But one thing I want to touch on real quick, because we deal with this every day. You've dealt with it a lot longer than me and most, I would say. But there's so many programs out there. So many. I mean, that's part of the reason that we're licensed to do what we do. But what goes into deciding what's going to be the best loan program?
So it's really an evaluation of the client's application. So we're going to look at that application, determine what the debt ratio is, the income levels are, again, what that credit capacity, how much you're putting down. If you don't have money to put down, that puts us into different programs and products to still get you into that property. And then there's sometimes we're going to give clients 2 or 3 choices and say, hey, there's several options available for you. If you don't want to put a lot of money down, you want to keep a lot of money in your bank account, we can go to this type of product with a lower down payment or no down payment. Or if they're really good credit and they want to put a certain amount of money down, they'll have the access to do that as well. So it really depends on what the client's needs are, and then we match those up with the programs we have. And a lot of clients might have multiple options.
Perfect. Okay, so just order of events. So we've got a realtor. We talked to them, looked at a couple houses maybe. We've talked to you. We've done our 10-minute application, and you told us, hey, green light, you're good to go. Here's maybe a couple options on loan programs. And then you get with the agent and kind of tell them what the game plan is.
Right. We'll update the agents to get a full game plan of what the customer qualifies for, what seller credit might be needed. We let them know that a pre-approval or pre-qual letter could be issued at this point, a full green light. basically to write an offer once we do get through our pre-qual process. If someone is self-employed, we will require 2 years tax returns to review, and we will take a review of those, which may take a day or so to review those tax returns before we do a pre-qual at that point with a self-employed owner.
That sounds a lot more complicated. Why is there such a distinction between someone who's self-employed and someone who's not?
Okay, so someone who's not self-employed is going to be W-2 with pay stub, and their hours are typically on a 40-hour work week. Not always, because there's some variable pay and even W-2s and pay stubs, and that could cause additional reviews of income. But most that work a 40-hour standard week and have a set pay, those are very easy to qualify and set the income. People that are self-employed, there's a lot of different type of businesses out there they may have. Sometimes they might be writing off a lot of expenses in a given year. Sometimes they may not write off certain expenses in a given year. So it depends on how much they actually report to the government as far as their income goes. A unique thing about us too is we're Freddie, Fannie, and Ginnie Direct. Most lenders are not. Why that's important is the lenders that do have Freddie can actually use 1 year of self-employment. And again, we just did tax returns where people are still completing their tax returns right now or filed extensions. And they can actually do 1 year tax return and show that income for that most current year. And we can qualify them for that 1 year where other lenders would have to have a 2 year return average, as long as that person's been in business for at least 5 business years.
So if I own a business and you're saying like if I had a bad year 2 years ago, let's say 2022, I guess that would be, and then 2023 was just a rocking year. I mean, I doubled what I was doing. We could just look at that 1 year if I was in business for 5 years.
That's correct. You have to use the most recent tax return, but
that's pretty cool. Okay. Yeah. All right. So there is options out there if you are self-employed. I mean, you heard it here first. So we got that squared away. Talk with the realtor. We're under contract. What happens after we're under contract? Are we done with you?
No. The fun has just begun. So now that we're under contract, we're going to enter the contract details into our system, and we're going to get your disclosures out. You guys probably heard that word disclosures. May not know what it means if you're a first-time homeowner, but disclosure just means your estimates of what your loan will look like. So disclosures is your estimate of what your closing will look like about 30 or 40 days later when you're ready to close. So the disclosures will show you what your monthly payment will be, what the program is, what your interest rate will be at that time, closing costs, all the important features, how much money you need to bring to closing, if any, on some of our low down payment or zero down payment programs. And it gives you a full gamut of what's going on with your loan and the mortgage. And it's going to kind of mirror what your closing will look like with the same type documents when you're at the title company with the attorney on the closing day. Now, once you have signed your disclosures that we provided to you, which is our estimates at that point in time, and we now have also collected your important vital items like pay stubs, W-2s, tax returns if needed, homeowner's insurance quote on the property. Any of those required details that we get to you that we need, you'll provide those, you'll sign your disclosures, and then we get your file into processing. That's when a lot of the third-party items will take place, like ordering your appraisal, ordering your title, setting up your insurance with your carrier that you provided on your estimate. A lot of those behind-the-scenes things will take place after we're at that point in the process. Now, we'll get all those items from you. The processor will review all those items and get them to the underwriter. Once the underwriter reviews them, the underwriter will condition the loan, and we're looking for what's called a conditional loan approval. And that's a big positive, a big win, and our clients will get updated when that happens. But a conditional loan approval means the underwriter has reviewed the basic items that were provided, the disclosures are signed, and again, third-party items are already ordered at this point. And then we'll get a condition list back from the underwriter that says, okay, here's some behind-the-scenes items we're going to need to verify and check. And here are some things that might be missing from the initial review.
Now, does that happen often? Because when you say conditional review, it makes it sound like there's going to be more than one review by the underwriter. Is that a bad thing?
It's not a bad thing. Conditional review is your thumbs up. Hey, everything looks initially good. Once those conditions come back from the underwriter, we'll resubmit those to the underwriter, and then we're looking for what's called a final underwriter clear to close on that review. And then once we get you clear to close, we can set up your closing with the title company to get you ready to sign your papers and take over that house from the seller. So you're going to typically have at least minimum 2 reviews. Sometimes when clients provide items, it opens up a can of worms where other items might be needed. That happens sometimes too.
What kind of scenarios are we talking here? Like, are we talking like maybe divorce scenarios, or like what do you mean by?
It could be any scenario. I mean, any different thing can open up something else. Something that's triggered on the fraud guard report. Something from the title company that they discover that we have to figure out and piece out. Maybe they own a property. I had one client where the parents signed over their house to the child who was in the 20s, and she didn't know it. And we found that on the title report, and therefore she was not a first-time homeowner. And luckily, we had the zero down FHA, which you do not have to be a first-time homeowner. We actually switched it from, I think this would be home court, to the zero down FHA, gave her a similar type loan product, which she could qualify for based on that information that popped up through the title report.
Wow.
Yeah, so things happen.
Okay.
I'm not surprised by anything. I've seen a lot of things in my years. So.
Is it fair to say that no two files are the same?
Yes. It's fair to say that.
The only other question I can think of in the order of events that would be important for someone who's kind of new to this is we got the roadmap now. But at what point are you locking the interest rate? Are you doing that on the front end before we're under contract? Are you doing that once the underwriters have reviewed that? When does that come into play? And how do you decide what rate to lock in?
Well, we grab the magic 8-ball. Rates are a little volatile. They're steady but volatile. So that's a really, really good question. So it depends on the client. So we'll review those options with the client. They have the option to lock at the time of their contract. So they can't lock until they have an address or a contract in the system. And so we'll review the lock options with our clients and or allow them to float. And float basically means we're not going to lock for right now. Your closing set up for 30 days from now. We're going to kind of watch what rates do, especially if we anticipate there's going to be some improvement. Today's market it's very difficult to tell if they're going to go up or down. So locking early is normally the best thing is, hey, you qualify for this rate. You're comfortable with it. Let's get it before the rate goes up because rates have been bouncing up a little bit here. They're expected to come down, but they keep saying they're expected to come down, and we keep hearing that. But they remain pretty steady and volatile for little slight ups and downs in the market. So we watch the market very close, and we'll share the information we know from the economists with our clients, and then we'll give them a choice to float or lock that particular interest rate.
So you let the client decide.
We do.
Interesting. Okay, so they get to make that decision, but a well-informed decision because you're helping kind of guide them through that.
Oh yeah, most want our recommendations and want to do what we recommend to do on that too. Again, there's no right or wrong because if we say we recommend lock and then rates go down next week, that's an issue. Now, that's a good point though, because if that scenario does happen, we do have a float down protection, which again, most lenders most likely do not have that option. So float down, in case there's a significant rate drop, we can go up to half of that amount on our float down protection to protect our clients. So if rates drop to 4% and we miss that because we already locked you in, you could actually get about 0.5% lower even though you're locked because of our float down protection, which again, most lenders will say, no, you're locked. There's nothing we can do.
Does that happen often where you lock somebody in like a 30 to 40 day window and then the rate drops a full point? Does that happen all the time?
It doesn't happen very often.
Okay.
Now, we're in a volatile market, but very small ups and downs. In a market we've seen in the past where rates were jumping from 2 to 4 to 5 and back down again.
COVID era was wild.
That's where we probably use more of those, but yeah. I don't think we're going to see that for a while. So the best recommendation typically is to lock early when you get your contract in if you're comfortable with everything, and go from there. Customers that are saying, well, rates are a little too high right now, I may not want to buy. We have 2-1 buy down, 3-2-1 buy down, 1-0 buy down options for our clients as well. And on our conventional in-house programs on that product, we can actually pay a third of the buy down cost, which I know other lenders do not do that either. So there's a lot of things I hope you're hearing in my speech that indicate we do some things different than other lenders do and have more to offer.
Well, I do want to dive into that a little more now. Now that we got the roadmap laid out, we kind of understand how things progress and what to expect. But everything that you set up to this point, it seems like there is just a lot of communication that is necessary throughout the process. It's not like you're sending out one email and just here you go, and that's done. You're having to almost handhold throughout the whole process. Is that right?
Right. There's some key points in your process of doing a mortgage. And any of those key points that come up, you're going to get communication on whether your appraisal is done, whether the loan conditional approval is out. If items are needed, you're going to be updated on that. How close we're getting this to things, you're going to get updated on that. Your CD, your final estimate, you're going to get updated on that. What's due at closing and steps to your closing process, you're going to get a full detailed update on that. And a lot of lenders actually do that pretty good. I think we still do it better than most because we probably offer more communication and more updates than most lenders.
Now, I will say Russ here is licensed in Mississippi, but if you're a viewer watching from outside of the state of Mississippi and you're not able to be graced and blessed by the presence of this man as your loan officer, I do want to ask you before you dive more into what separates you, because I know you're itching to get there. What should somebody who's trying to buy a house look for in a good loan officer? What qualities would indicate a good loan officer versus a bad loan officer?
That's a very good, challenging question.
It's no problem for a 30-year veteran.
No, of course not. So what should a prospect home buyer look to into a loan officer? Blue eyes. They should look for someone that they can communicate with, that they're comfortable with. And again, a lot of times you'll be able to tell if the loan officer is knowledgeable and experienced and can explain things well to you to make you comfortable. So the more comfortable you are, and it's probably good to check with one or two different loan officers in your process. It's best to get recommendations from people that have dealt with a certain loan officer before, from your realtor. Your realtor may know who are some of the top loan officers in your particular market. I know in our market, we're considered one of the top companies to work with. And again, one of our biggest claims to fame, going back to the resume of a company, our company is a top 10 lender in the U.S. And our most recent big claim is that we are the number one, ranked highest client satisfaction rating company in the nation, let alone most likely in our market, but in the nation as well, which is real important. So our company has a high resume, not just in Mississippi, but every state in the nation. And this is per Zillow. So Zillow is one of the sites where a lot of people look at homes and houses, and it's one of the biggest ones in the real estate market. And that one has cited us to have the most highest number 5 ratings available, more than any other lender, I think by a good bit. So you want to look about the history of the company, who they are, what their client satisfaction ratings are, what your realtors say about the lenders as well, I think is very, very important. And again, looking at Google reviews as far as who are the top lenders in your market, I think is a great thing to jump in. I know a lot of the younger folks are onliners and look at this internet stuff all the time, which is great. And there's some good information in there. So again, you'll find some really good information. If you do just a little bit of homework online, check with your local area realtors and ask their opinion as well too, because they normally do know a lot of information.
I feel like Russ is picking on me a little bit for saying younger. For those of you that don't know, I am Russ's son. He's not only my area manager, he's my dad. So in our world, in our business, a lot of our clients we work with together, and I'll let you tell them what they have to say. What do our clients usually confuse us as?
They want to say I'm your son.
I don't know about that far.
No. They take us on as brothers, especially when he's got his beard in full.
I did shave right before doing this one, but no, when the facial hair comes out, we do get confused as brothers a lot.
A client or a realtor might say, "Hey, I already talked with your brother about this." I'm like, "Oh, super cool," and he's like, "Oh, that's not good for me."
So I'll ask you actually on that vein, what's it like working with your son? I'm gonna put you on the spot a little bit with that. Be very careful how you answer this.
That's very risky. Jared has been with our group now about 7 years, and has become very respected in this market as well too. So super proud of him. Always scary to work with family, but again, he's been a really, really good fit for our whole branch. He wears many hats and does many things for the whole office and for the whole team. And this year in particular, he's focused a lot on his LO role. And he's really doing extremely well in that. And again, he's getting 5-star reviews. Across the board, people really relate to him very well. Younger buyers, older buyers, and everyone in the middle. They love them some Jared. So
it's hard to pass up on all this.
He gets most from his mom, I think, but no, he obviously, you can tell he communicates very well. He's very knowledgeable now in the products and procedures, and he can guide clients as good as some other lenders out there that have been in the business for 20 or 30 years. Matter of fact, I think I told him a week or so ago, I was at a closing and bumped into another lender that was another 20 to 30 year experienced mortgage lender like myself. And he said he was in a neighboring closing with Jared, and Jared had to take a phone call, and he could hear the phone call and the discussion. And he told me, he goes, man, he is really, really, really good. And he sounds as good as I do. And I've been doing this for 20 or 30 years or better than me. And I was like, he sounds pretty good. I definitely understand. Again, we can interchange discussions with clients and make things very smooth. And it's kind of a nice double team too, because some lenders don't have access to another loan officer or LOA that can jump in and fill the need for clients or get them information they need or questions in case one of us is busy or tied up. Again, our ops team behind the scenes is the best in the nation, not even a close second on that.
Be clear, when you're saying ops, who's all involved in the ops side of things?
Well, I'm talking all the way from the processing, underwriting, and closing team. Okay. And again, all those things have to run smooth. So you might, and that's another big thing as far as someone who's looking for a lender. What's behind the scenes? What's the resume of the company? What's the resume of the lender? What's the resume of the ops team? How is their closing team? You could actually call the title company. The realtors would normally decide where the closing is going to take place, what title company or attorney will do the closing. That's a great place to contact you and say, hey, look, talking with Guild Mortgage, what's your experience with them? And they will tell you that we've got one of the smoothest packages that come through, makes it nice and easy for the title company, smooth for the clients for the close. We don't need funding numbers on many products. Some of the bond deals we do, but most products we don't need to wait for a funding number. A closing with another lender, you might be waiting for a funding number on a regular deal, and that may set you back 20 to 40 extra minutes in the closing. Our closings, that doesn't happen. So we're very happy about that. But to have a team in place that fits all the, checks all the boxes as far as communication, service, making sure we give our clients the highest level service possible. That's the way I've managed from start to finish, and that's why we've had so much success. And we had some great people that we work with and great loan officers on our team. But again, the glue behind us is the processors, the ops manager, the underwriters, and our outstanding closing team. Because it's a whole process. It's not just the lender.
It's not just the pretty face up front.
It's not the pretty face up front. Okay. And again, some of these national online companies too, again, they might have someone that sounds really savvy, maybe as savvy or as good as me in talking about mortgage programs, but that might be your last time you talk to them. I stay with you through the whole process and go to the closing at the very end. The online company is not going to go to your closing. They're not going to make sure everything's running super smooth. And there's normally different people, like 4 or 5 different people you'll talk with throughout your loan process with an online or out-of-state company. So we handhold you and are here and available 24/7. We answer the phone on the weekends. We answer the phone at night. We're different than a bank. We're different than those online lenders. We truly put our customers first and try to make sure they have the best experience possible.
Fantastic. Well, we are coming close to the end of our time here. What I always try to do with my guests is give them the last 60 seconds or so to do any shout outs, any last thoughts that they have. I demand that you do your advertising tagline. I think you know the one I'm talking about. I demand you do that for our audience, but any shout outs, any taglines, anything else that you'd like to share with our audience?
Yes, but I can't do that in 60 seconds. Yes. Tagline, again, I'm known for mortgages, mortgages, mortgages. 24/7, that's all we do. But the housing market is strong. It's one of the safest investments to put your money into. If you want to learn more about investments, which is maybe a whole other segue, contact me. We deal with a lot of investors. I invest in properties myself. There's a lot of wealth to be created in regards to real estate. So real estate is a very super, super important thing, especially if you're just getting into it, buying your first house, because that's where you got to start. You got to start somewhere, and that's the place to start. So contact your local lender, preferred lender in Central Mississippi, your go-to lender, and that'd be any of the loan officers at Guild Mortgage, and or check with your realtor and or title companies about who are some of the top lenders in the market as well too. There are great programs to get you in there. Another important thing I want to leave you with you, again, we mentioned some no money down programs. You don't have to have money. You do have to have fairly good credit. You do have to have a good debt ratio and a good job and income. But if you have those things, but you're renting, you're throwing away some money. So again, if you've been renting for a while, you need to have a discussion with us, and maybe just to get the right plan. And maybe if your credit's not maybe where you think it needs to be, it might be close enough, and we can actually guide you through that process too and give you some direction if need be. But the important thing is to start somewhere. So that's what I want to leave you with. Start somewhere in regards to purchasing a home. It's one of the most important things you can do for you, your family, and to create wealth in America.
I couldn't have said it better myself. Yeah, that's pretty good. That's a pretty good way to end it. Russ, thank you so much for being here on the podcast. Episode number 2.
Dude!
One of the top 5 episodes. You're number 2. How about that?
How come I didn't make number 1?
Well, you're not that special.
What?
Thank you so much for tuning in to this episode of The Pulse, where we got to give you a heartbeat on what's happening in the world of real estate.